just newer firms who are coming into the market sort of 2022 and 2023. It's a case of, well, how do we stand out? How do we compete against people already established like us and a few others? It was a case of, well, offer more drawdown, offer better conditions, offer bigger discounts and stuff like that. But those people didn't understand the models and the maths, and that ended up meaning that they just had a business that didn't work. And we've seen that. We've seen about 10, 20 firms, probably more, go under because of doing exactly that.
Hello traders, welcome back to We Are Funded Trading Plus, the podcast. Today we're joined with Simon, the CEO of Funded Trading Plus, and this week we asked our traders a very important question. We asked them, do you think evaluation stages are there to make traders fail or to actually test their skills? So before we get started, Simon, could you just sort of run through the purpose of the evaluation stages for traders?
Yeah, I mean, it's a pretty basic, important part of funded trading, really. I mean, there's direct funded programs, but they're slightly different. As you know, people have to put a bit more capital up, so they generally take care of them a little bit more. But yeah, of course, I mean, the firm needs to make an assessment as to whether someone can be trusted with funds, whether they eventually copy traded or anything like that or not. So yeah, they're absolutely important to the entire model. We're not sure what to replace them with. So I hope it's 100% in one favour. Let's see. What's the results?
95% of traders said yes, they do think valuation stages are there to test your skills and they're not there to make you fail. Obviously 5% did say that they were to make you fail, so we'll dig into that a little bit later. But yeah, the results are quite slanted on this one. So what do you think are the main reasons for assessing traders' skills? What's the reason that you want to assess the trader's skills before giving them funded accounts?
I think you could buy, like different occupations and stuff like that. You need make sure someone's got the skills, experience and competence to perform the role, don't you? So it sort of provides that barrier. It doesn't always. You might have someone who trades quite sensibly and then does something wild on the funded account, or people who try and punt and pass in one test. But generally speaking, it's filtering out those people who just aren't suitable to be trusted with a funded account and those who are ready.
Okay, so obviously 95% said yes, 5% of traders said no, they are there to make you fail. Let's just touch upon the 5% of traders who said no, they're just there to make you fail. Why might some of these traders feel that way?
I mean, I think they probably think about some of the rules really that firms might have that are there to make them fail the evaluation rather than the evaluation itself. I mean, like I say, it doesn't really work much if you don't have an evaluation phase. There's a better alternative. Someone can let me know, but it's just a fundamental facet of the entire prop space.
Yeah, so touching on that then, how do you make sure at Funded Trading Plus that the evaluations are fair and they're balanced for traders?
Well, we try and sort of, like I say, give them freedom to trade how they want. Generally, we let people trade news, providing the sensible. We don't give people time limits, minimum trading days, and things like that. So we try and let people be able to express themselves. And we also try and frame it with a bit lower leverage to sort of than others might have. We run up to 30 to 1 rather than 100 to 1 to encourage people to stay sensible. I don't get these firms that are like, we want you to manage your risk. Well, here's 100 times 100,000 in buying power, 100 being the leverage. That doesn't make sense to me. But we try to give people lower risk, try and encourage and steer them to do that, as well as some rules and guidance that we have as well.
Yeah, cool. So other than evaluations, what other routes or alternatives are there for traders to become funded traders, if any?
Well, there's a direct funding model where people who are confident enough not to pass the evaluation phase. Now, you might think, well, how do you test their skills and things like that? Well, you don't necessarily do, but you ask people to pay a bit more sort of in order to access a direct funded account, so generally people who've got more of their skin in the game, they tend to treat it a bit more sensibly. That's what we've found.
Yeah, awesome. So what sort of tips and advice would you give to traders looking to just go straight for the direct route to funding where they haven't had to prove their skills, let's say?
Yeah, I mean, it really depends on what suits different people. And evaluations are far more popular than direct funded generally because I guess the price is a fair bit cheaper. But if you're confident enough to be able to think, I'll just make some profit straight away, I've got a tried and tested strategy, even if it's on demo and they're taking it seriously, then they might want to bypass the evaluation. But then that same argument's the other way around, isn't it? It's like save yourself for money, take an evaluation. So yeah, it's a difficult one. It's a difficult one for people to judge really as to where they are.
Yeah.
Just one more point on that. Some people, I think, don't trade evaluations as well because they're trying to rush them.
Yes.
Until they get to the funded. So those who know that they'll trade more sensibly if they're straight into the funded stage may be suited for the direct funding.
Yeah, I wanted to touch on that because you said then like sometimes you can trade the evaluations differently than you would the funded. So I was going to say, what sort of how does psychology change from trading evaluations to trading the funded accounts?
I think it's almost similar to a normal sort of brokerage account where you've got the demo or sim account and then you've got your own account funded by your own capital. I think sometimes you can treat a demo account as just like meh, and I think people can do the evaluation. And like I've said before, people don't want to be trading a valuation, they want a funded account, so that can force them to rush and take more risk to try and pass, when really it's about just keeping a bit more perspective and being like, no need to rush.
Yeah, have you seen over the years that there's any strategies that work better for evaluations than they do for funded accounts, or is there not too much we can?
I don't think it's too much the strategists, because everyone's got their own thing. We have people who are short-term day trading scalpers all the way up to long-term swing traders. Generally, the sweet spots in the middle, people who hold for a little bit of time but not too long, tend to be the best. But it's more, not really so much strategy, but more just risk management. Those who keep themselves in the game and risk a little bit less tend to do better, because then if they do have a bit of drawdown, it doesn't take them out of the game.
Yeah. How would you say the evaluation stages have changed in the industry from the early days when Fund Trading Plus just launched to where we are today?
Yeah, they're going to be. I mean, we were the first, I think, pretty much first, I think, to remove time limits, as far as I were, casting my mind back to 2021. So I think that's pretty much industry standard now. But they've changed insofar there was a ever greater race to the bottom of like more drawdown, of more leverage, of things like that, and that obviously has created a bit of a disaster for some firms that no longer operate, because it just wasn't a sustainable model. But the core fundamentals have remained pretty much the same, either that one phase or two phase. I've seen three phase and other creative things, but I don't think you can get too far away from the core established models.
Yeah, can I just touch upon that? You said the race to the bottom. What do you mean by the race to the bottom?
Just newer firms who are coming into the market sort of 2022 and 2023. It's a case of, well, how do we stand out? How do we compete against people already established like us and a few others? It was a case of, well, offer more drawdown, offer better conditions, offer bigger discounts and stuff like that. But those people didn't understand the models and the maths, and that ended up meaning that they just had a business that didn't work. And we've seen that. I've seen about 10, 20 firms, probably more, go under because of doing exactly that, which is bad, obviously, because people are owed money and weren't paid. But at the same time, it gives traders a reality check of like, if it sounds too good to be true, it is too good to be true. Something I say all the time.
Yeah, do you think that sustainable model is now coming into fruition, essentially, where traders understand that there needs to be a sustainable model for payouts to be consistently distributed over long periods of time?
Yeah, I think they realise there's a balance to be had. You can't have it all. You can't have these ridiculously general conditions and still expect to take out, tens and hundreds of thousands of dollars on some occasions. But that's not a problem for us. I mean, we always designed ours. We knew we were never going to sort of be trying to be the biggest and just have the most traders. We never bothered about that. It was a case of a solid model that'll stand the test of time, that we've not really had to change. In fact, the only thing we've done is make improvements, like an extra % of daily drawdown. We've never. Our rule was always, we'll only ever improve our programs, and that's all we've ever done. But we're still making them sustainable, and I'm really proud of us doing that.
Awesome. Let's go back to the traders during the evaluations. What are the main mistakes you found traders can make during the evaluation phases?
Over leveraging, just trying to pass too quickly, and just taking punts on things, and then just getting this toxic cycle of failure, reset, failure, reset, failure, reset. And it's like, no, you need to break that. I mean, I've seen some firms on like social media, like saying the record amount of evaluation failures someone's had. I'm like, is that a good message to send out? It just seems a weird one to me. But
you don't go public with that sort of stuff.
No, it's just I don't understand what the benefit for that is. I mean, they could argue it's transparent, but it's just maybe a lesson to others. But yeah, it's just not the sort of thing I want to focus on. Something else to keep in mind is if it's too cheap, it might be because they're paying so few people out. I mean, the futures space is like this. Forget the subscription aspect. It's like really cheap evaluations, but that's because the firms are paying out so few people. It's like when firms brag about really high pass rates. It's like, it's okay passing, but how many people are actually paying out? So it tends to be this sort of front end, back end balance, and we try and balance ours out quite nicely. We're never going to be the cheapest, but if people do profit, get paid on day one, that's how we see things as working well.
So we've spoken about the common mistakes traders make during the evaluation phases. As Funded Trading Plus from the top down, what is the main qualities you look for in traders during evaluations when becoming a funded trader?
I like to see a good sample of trades. The larger sample you get, the more likely to see a strategy play out. You more likely to see the equity curve, the ups and downs, and that goes hand in hand with risk management. I want to see longevity as well. What we saw is the whole industry, I think, towards the end of last year was just a compression in time frames. We were passing and failing more aggressively the funded accounts, and we saw our own data was sort of like getting more and more compressed, and people were treating it not like a professional serious product. And we've had to try and encourage people to sort of like, well, no, we want more of those positive trading behaviors rather than people just trying to get rich quick and take punts.
Yeah, let's definitely touch on that longevity and challenges, because one of the questions I've actually got: how do traders stay motivated in evaluations, maybe when they've got off on the wrong foot or they've started the challenge and drawdown and they need to? How do they overcome that, and how do they stay motivated during tougher evaluation periods, because it is normal.
Yeah, of course it is. I mean, like as I've said, you don't want to be on an evaluation phase forever. You want to get your funded account, but I think it's just a case of focusing on destination. It's the old journey destination cliche, isn't it? You know, we started off our funded trading room 13 years ago now, and then eventually got to where we are now of a large funded trading firm. So it takes time to get me. Well, you can give an obvious comparison like the gym. You know, you start off with the gym, it's a pain in the arse. It takes a while to get to your end goals, doesn't it? Maybe months and months and months. So you just got to focus on the eventual goal and destination and realize that it's a process, it's a journey.
Yes, I think it's clear to say that evaluations are there to test your skills and they're not just there to make you fail. So yeah, thanks a lot for answering all my questions as always, Simon. And all the viewers at home, thank you very much. And we'll catch you on the next episode of We Are From Trader Plus, the podcast.